we don't want to ignore the bank situation either, because that is a crisis that, listen, before this all happened on Saturday, was scaring people like me. I mean, I was looking at saying, okay, because you're getting emails from banks that you have your money in, and they're saying, don't worry. CEOs of all these major, huge banks. And then they start telling you, these are small banks. And then Credit Suisse goes down. You're like, okay, that's the bank that on the show Succession gives out the loans to like the News Corp companies.
Right. Credit Suisse is a major lender, second largest lender in Switzerland.
They're in shows.
Yes. However, and this is what's important here, the shares of these banks are dropping. I mean, it was worth $7 billion on Friday, and by today, it was worth half of that, Harry. And this is where you got to say, whoa, what happened between Friday and Monday?
There has been a contagion with respect to
Explain
the value.
What a contagion is, because that's important.
Well, there are two meanings. First, when I use the term contagion, I'm talking about a contagion with respect to the value of the shares. That is separate and distinct from a contagion with respect to a run on the bank. And that's what provoked this particular crisis. So we had a run on Silicon Valley Bank. And part of the reason why there was a run on Silicon Valley Bank is because Silicon Valley Bank really didn't care about risk. So much so, they didn't have a chief risk officer for the U.S. branch since April of 2022. They did have a risk officer with respect to international banking, but she identified as a person of color and was focused on social activism as opposed to banking risk. And so those of you who are listening, who have deposits in banks that are focused on social activism, you should take care with respect to keeping your deposits in those banks. In addition to which, we have an abject failure by banking regulators. They knew that SVB was at risk since 2019 and essentially did nothing. They sent their regulators.
Interest rate hikes. I mean, they killed everyday people with interest rate hikes. They're going to do it again this week, they said.
Yeah, they're going to raise them again.
But they knew that this bank was failing years ago.
Right.
They knew the bank was failing, but they also, the bank officers should have been aware of one fact, that with the rise in federal spending, this will eventually drive up interest rates. Yet SVB Bank, Signature Bank, probably First Republic Bank, they held a portfolio of U.S. treasuries. The value of those treasuries was falling as interest rates rose.
Right.
And then the banks were squeezed, in part because they made a misjudgment about the future of the market. So these individuals should be charged, in my opinion, the board of directors, with a breach of a duty of care and possibly a breach of a duty of loyalty. And I hope, if sufficient evidence can be adduced, that they are charged criminally.
So here's what's interesting, Harry. So you had the shares of First Republic Bank, which is out of Kentucky, plunged by nearly 40% in pre-market trading. Okay, so that's a big drop. Before the bell actually rang, it was down at 37%. Then you had this, as Jordan mentioned, possibility of a Fed rate interest hike again, which is going to cause more banks trouble. Then on top of that, we said UBS agrees to what's being called a, quote, shotgun merger engineered by UBS to buy Credit Suisse. So,
which is the Swiss government.
It is a Swiss government. It's a $17 billion wipeout of Credit Suisse's bondholders has not gone down well in Europe, is one of the headlines from CNBC. What's not gone down well anywhere?
Absolutely. In part because the bank regulators, they are increasingly focused on ESG. What is that? That is a focus on environmental social governance. They should focus on profits and losses. They should focus on risk. But they
Focus
are
on not failing would be a good idea.
Exactly. But the Biden administration, for instance, has pushed ESG, and it's now trying to push it down the throat of pension funds. So the American pensioners, working class people, should be aware that the federal government has caused a massive portion of this particular risk.
And then when reality starts hitting the fan, BlackRock, who is still running their ESG ads, but announced they're moving away from ESG.
Yeah.
Because guess what they have to do? Survive right now. That's pretty scary. Because if you look in any of your investment accounts, let me tell you, everybody here, if you in the funds, has got some BlackRock fund.
Oh, no question about it. But remember this. I was looking at this over the weekend. So people are not going to remember who they are anymore. But Lehman Brothers, which was one of the huge houses, Goldman Sachs, these were huge houses. But Lehman Brothers fell during the bank crisis, which, by the way, George Bush totally unaware. I mean, that was like a fiasco at the end of that term of that president. That was, and I'm not trying to be disrespectful to any president, but it was like the whole economy was cratering and the entire bank industry was cratering. Well, here's the interesting dynamic on that one. There was Lehman Brothers on a Friday, they thought they were going to be able to pull it out. By Sunday, these things seem to happen, Harry, over the weekend. By Sunday, the president of Lehman Brothers basically said, we've got like $5. That's the illiquidity here is unbelievable.
It is, but
you couldn't run a gas station like they're running these banks.
That is absolutely correct. And so many of these directors, the board of directors of these banks, should be held they should be held liable. Keep in mind that at SVB, what did officers do before the bank collapsed? They sold some shares, and more likely than not, they were in possession of non-public information. And that more likely than not violates SEC rules and the law. And I hope we can hold them accountable.
They didn't take the money up.
Okay, so that's a great question.
I've seen it
let me
around.
offer the hope here. We do have FDIC insurance. So deposits up to $250,000, Harry, are protected by the FDIC.
That is correct. But there's a problem, not with the FDIC and not with that a particular amount, but the federal government, through the auspices of the Treasury and the Fed, they are essentially guaranteeing deposits at SVB that exceed $500 million. And then they now want small depositors to pay a larger fee for FDIC insurance to bail out depositors at large banks. So really what we have going in the banking sector is income redistribution from working class people to the wealthy. So President Biden keeps saying the taxpayers will not bail out the banks. But if you have a deposit at a bank, let's say it's $20,000, your fees for insurance are going up, and they're going up to bail out Oprah Winfrey, who had over $500 million in SVB.
Had a couple. I just had $3 billion there.
No, Peter Thiel, I think, had $500 million. Oh, he took out $500 million, but I think he still had $5. So it's everybody. There were major players.
Yes,
had money in this bank because it was a big investment bank. But it's supposed to be high risk.
Yeah.
So there is this part of like when you look at a free economy, if you're going to take risk like that, why punish the folks like us who go through we don't take those kind of risks. We're not going to get those kind of returns from our banking.
Right.
But, those kind of huge venture capital loans. But it's a risk you take by putting your money. And that's why I think what Harry says, your money is being used to bail out billionaires right now.
Absolutely. And at SVB, a large portion of their loan portfolio was for what? It was for climate change venture capitalists. And we all know what happened with Solyndra during the Obama administration. Those were failures. And so we are bailing out rich people who are taking undue risk. That is the problem. And guess what? The question becomes, would we bail out the citizens of East Palestine, Ohio, if their bank went under? I think the answer is no. I think Treasury Secretary Janet Yellen would say, there's no systemic risk here, so you're on your own.
Good luck with that. All right.
But it's the picking and choosing that gets people very nervous.
Absolutely.
That's what happened under Bush.
Yep.
Some banks got saved. too big to fail. Remember that phrase, too big to fail. That's what we're talking about. But then the Lehman Brothers, they said, let them fail.
No, I know.
So people bet on, well, they're going to cover everybody. And then they didn't.